Okay, so our silver bullet review for Tuesday, June 18th. First of all, I had noticed that these markets were not as correlated this session. So price action was not matching up as nicely and as neatly, as uniformly as usual. These big candles down and up, and we had, yes, down closed and up closed, but you can see visually the difference in how price is forming, which usually doesn't make too much of a difference. But at the time of this session, I was on MESM, July's contract, and the correlation difference was even bigger. So that was something to pay attention to. When the markets are not correlated, very important to wait for the extremely obvious setup. So the RTH gap was the same. We wanted sell side or towards the south, and it was unfilled at the beginning of the RTH gap. So the RTH gap was the same. Then over here we had a liquidity sweep with a sudden drop. Okay, this liquidity was taken with a sudden drop in price. This liquidity was not taken. So we had a divergence with a very obvious drop in price here, leaving fair value gaps. Okay, and why is this not as uniform? Because if we go to the 2-minute chart, now we see how pretty this looks. Very nice box setup, very nice FVG. Liquidity sweep, drop in price, touches the FVG, and down to the take profit point. Now why is the take profit point here when ES, and if we also look at the 2-minute on ES, we can see a much cleaner fair value gap entry. And the take profit is here on NQ, even though on ES there is a fair value gap and heading towards the RTH gap, is simply because during the session price was not printing uniformly. So when correlation is lacking, it's much safer to take profit sooner. And plus, when ES did hit its take profit, which is here, it's almost the same price. So what's the difference between a few ticks, a few points? So take profit when you can and get out. If we see here on the 2-minute, the fair value gap, the opening of this candle is 199. So up here, the O is open, and the high is 200.50. 200.50. So we go back to the 1-minute, and on the 1-minute fair value gap here, high 200.50. So the fair value gap was there. It looks messier on the 1-minute, but on the 2-minute, it's quite clean. Much prettier and uniform, much easier to read. So this works the same way. 2-minute, and if you open this bar up to the 1-minute, you see the fair value gaps, and that's what wick gaps are, what ICT calls immediate rebalances. Inside this wick are fair value gaps. And so when you see a wick gap, like if this wick was down here more, if this wick was up here more, inside that wick on the 30-second chart, there are fair value gaps being respected already. So it's the same thing in the other direction. 1-minute, 2-minute chart. And that is the silver bullet review for Tuesday, June 18th.